Hello, I'm Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, September 19th, 2013. While the market debates the size of this year's corn and soybean crops, the focus returns to old crop when USDA releases quarterly grain stocks estimates at the end of the month. Market analyst Paul Bergner joins me for perspectives on both old and new crop dynamics. September 1st stocks are important on several fronts. First, they become the official beginning stocks estimates for the new crop year. They also provide clues about hard-to-measure demand, such as feed usage. And they've provided plenty of market-moving surprises in recent years, both bullish and bearish. The amount of corn fed to livestock this summer is especially hard to figure. With the cattle herd down, corn expensive, and plenty of wheat around, feed usage could fall to just 365 million bushels, leaving 683 million bushels of corn left over on September 1st, a little more than USDA forecast earlier this month. But the big question for the market remains the size of the 2013 crop. Traders are starved for clues and tried to make updated certified acreage data released by the Farm Service Agency Tuesday a big deal, even though many were barely awake when the numbers broke at 5 a.m. Prices rallied on the big estimate of prevent planted acres until the speculators realized the FSA data has little meaningful correlation to the numbers USDA's National Agricultural Statistics Service reports. Crop ratings are still dropping nationally, but stabilized in the key states of Iowa and Illinois, suggesting the crop is still a big one. Paul, a lot of farmers seem ready to lock up their crop at harvest and store it until prices rally. Do you think that strategy will work?
You know, Bryce, I'm not quite ready to go down that road yet. I'm a little concerned about that strategy. I think there's a big corn crop out there and still a lot of bills that are going to need to be paid yet this winter. I do see a couple of sale points out there. I think early in the year, if the South American numbers are significantly lower, as we expect with the strong soybean prices, and then I think right ahead of planting intentions. But I still think it's going to be tough to squeeze $5 out of this market, and I know that there's a lot of producers holding out for that $5 number. My bank background tells me that at some point later into the spring, renewals are going to have to happen, and there's going to be some folks that are really going to be encouraging some of these guys to move some of that corn into the market.
Well, USDA's estimate of September 1st soybean stock shouldn't be too hard to guess, because crush and exports, the main categories of demand, are pretty well known. But with stocks historically tight, every soybean counts, and USDA's estimate of imports in a catch-all category called residual usage could provide surprises. If they don't, carryout could still be a little less than the government currently forecasts. The size of the 2013 crop is much more in doubt. Crop ratings fell a little this week, and the FSA acreage data actually correlates a little better for soybeans than with corn. Based on that analysis, the prevent plant data appears to suggest harvested soybean acres could be another 750,000 below USDA's August survey, knocking 30 million bushels or so off already tight projected carryout. Charts also provided plenty of food for thought this week. November futures traded within a half cent of its breakout gap from August 23rd before stabilizing, or at least trying to, until Stelling kicked in again today. And the roll from September to November on the daily nearby continuation created a big bearish island top that needs a November move to 1385 to completely eradicate. Futures are finding support on big export sales to China. Will that be enough for the market to hold and move higher, Paul?
You know, I think higher is a relative term in the soybean market. I'm thinking that we seem to have a limit up there around $14 right now, and I think those exports are strong. They're definitely adding support, but I'm trying to find a reason to get it to push above that 14. On the other side, we keep hearing large numbers out of South America in terms of acres that they'd like to get in the ground, and we're seeing some pressure on the downward side. and any rain that's coming, there's still some hope that we can rescue a few soybeans out there. So it seems like that 1335, 1340 range is kind of where our bottom is. So we're trading in that narrow range, and I don't see anything that moves us out of that right in the very near future.
Wheat will also get some news September 30th. USDA releases its small grain summary, providing final 2013 production data. Big changes aren't likely, though the crop could be a little bigger due to better spring wheat yields. Another question is how much of the 2013 crop was fed this summer. I've penciled in 372 million bushels, which would put September 1st stocks around 2.076 billion bushels. But the number the market appears to be watching closely is exports. Shipments in the latest week hit a marketing year high, and sales were good too, around 26 million bushels. The market is also watching conditions for new crop seeding, which should start to pick up soon on the plains. Futures have struggled to gain traction, but moved sharply higher on Thursday. What do you think, Paul? Is wheat ready to turn around?
You know, I'm not convinced it's ready to turn, but I do think there is some opportunity here to capture some gains if we still got some sales to make of this 13 crop. Basis in the plains is widening as we speak, and starting to get in that 25 to 30 cents under range. Really a big drop from where we were just a week ago. We've fed a little bit more wheat coming into the fall than we expected to. I think the late harvest on corn has really helped hold on to that demand on the feed side, but I'm still not excited about holding wheat into 2014. Once that corn becomes available, it's going to be hard to convince me that this market's got a big upside by holding it on out into the spring.
Farm markets don't trade in a vacuum, of course, and there was big news from the Federal Reserve, which surprised Wall Street and Main Street with what it didn't do on Wednesday. The central bank said it would maintain its financial stimulus program, buying $85 billion in treasuries and mortgage-backed securities each month, trying to keep interest rates low on term debt. The move sent stock prices to record highs, pummeling the dollar and triggering big rallies in gold and crude oil as well. Some of the enthusiasm spilled over into the ag market. Do you think it will last, Paul?
You know, I'm not convinced that it's going to last. I think when you really take a look at all that was said in that comments yesterday, uh, they also backed off the growth numbers, both in 2013 and 2014. So I'm a little concerned as to whether or not this is a long-term shift, or is it just a bump that the market got excited about because we backed off what we thought was going to happen. So I'm not excited about a long-term gain from this. I think it's more of again, maybe a flat and a trading sideways.
Well, thanks, Paul. We'll be back on September 30th to go over USDA's stocks and small grains reports on the next edition of The Buzz.